Good morning, traders. Today is December the 23rd. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be talking about the London breakout. Okay, the first thing I want to discuss is what a London breakout is. It basically refers to the period of time which is the start of the London session, and it's a breakout trading strategy. Now, before we get into the actual strategy, we need to check out the YouTrading.com Forex heat map, and we need to sort of see what the pound is doing relative to everything else. So today the pound is strong against all of the other peers. And if we look to above, you've got the yen, and below we've got the Swiss franc. They're looking pretty weak. And then down here we've got the Australian and New Zealand dollar, which are kind of mixed. Obviously the pound is doing better than them, but the commodity pairs are generally doing quite well. The bottom left-hand corner is turning green, whereas the top right-hand corner of this heat map is turning red. So it's more of a risk-on day today. If we go to the active trader platform and then click on the left-hand side, we've got the sentiment indicators here. So I've got the pound versus the yen, pound Swissy, pound New Zealand, and pound Aussie. And if we look down through the sentiment, obviously here, most of the retail traders on the platform are bearish the pound versus the yen. They're also quite bearish the pound versus the Swiss franc, very bearish the pound versus New Zealand dollar, but they're extremely bullish the pound versus the Australian dollar. So that doesn't really make sense. If we go with a contrarian view where, if the retail traders are basically trying to short the pound, we need to be starting to look for a long. Okay, so with all that in mind, we've got here the four currency pairs I just mentioned. So we've got the pound yen, top left-hand corner, pound Swissy, bottom left-hand corner. So this is your kind of risk off or on sort of trade, where if the pound is supposed to be doing better than the Swiss franc and the yen, that means there's flows out of the safe havens into the sort of higher yielding pound. To the right, we've got the New Zealand dollar and the Australian dollar versus the pound. And you can see here that just in terms of the market structure, these pairs aren't pushing up against these upper bounds of the Donchian channels. So the actual indicators that I've got up here are the Donchian channel 50, which is the thick red and green. Then we've got the Donchian channel 20, which is actually thinner lines sort of within the sort of range, as you can see here. Now, when the 20 pushes up against the 50, we get the greens all meet, and that is bullish. And when we've got the reds pushing up against the reds, that's more bearish. So, like we said, we were looking for a long on the pound versus the yen today. There was a build-up of pressure around the 152 spot 50, which we sort of mentioned yesterday in another video. And if we just look here, so at the end of yesterday's session, market goes dead across the Asia-pac session. There's a lot less volatility, a lot less volume. There's less traders, basically. And then as the London session opens up, then we see a build-up of pressure, as the London is essentially like the strongest market for volume in terms of Forex, especially with the pound. And here we can see that the pound broke out of the Asia-pac session. So this purple box is the Asia-pac session. And everything basically lines up. So, in terms of sentiment, we were looking to go long because 81% of the retail traders were trying to go short. We had a build-up of pressure up against a known sort of support and resistance pivot line. We had the 20-period Donchian channel meet the 50 on the bullish side, and price basically just kept coming underneath those highs from yesterday, which is essentially the London close. And then we pushed up against that. And then when volume came into the market, that's when we had the breakout. So the breakout itself is quite simple. It's just you put your stop above, in this case, the range that's printed during the Asia-pac session. So we want a long position. You put your stop below that Asia-pac session, and you can, if you like, follow your trailing stop with the lower bound of the 20-period Donchian channel. So this little red line here. And then you're looking for a 1-to-2 risk reward ratio. So then you just stretch this up to where you get a risk reward of 2. And we're essentially targeting this level here, 153 to spot 769, or close to 153 to spot 8. Down here, same again. go to the sentiment indicator, pound versus Swiss. Most of the traders were kind of trying to short the pound today versus the Swiss franc. Obviously, there's a lot of talk around Omicron disruptions, and sentiment's not great in the world. But again, if we put our long position just above the Asia-Pac session, we can trail our stop with the red bounds of the Donkin channels here. And then we're just looking for a 1 to 2, again, risk to reward. So we're now targeting 1.2376 or 1.238. So that's how I would trade the London Open. That's the breakout strategy. And you can see here, you can keep out of trouble by, if your sentiment indicator over here says the pound versus New Zealand dollar, most traders are looking to go short, and you want to be a contrarian to those guys, and you want to go long. You look to the New Zealand dollar versus the pound here, top right corner, and you can see here that the Donkin channel 20 period look back hasn't met the 50 period look back Donkin channel. So we haven't got a bullish overall sentiment. This is a 30-minute chart across all of these pairs. If we were to get above the Asia-Pac session here and start pushing up against the 1.965, if we start moving higher, then this momentum that's building with the pound in relative strength, and what you can see across the charts, if that was to continue into the US session, then it's quite conceivable that you could actually put your sort of buy stop above there. You just have to have a larger risk, so your reward again would still be 1 to 2, but you'd be risking more pips essentially. All right, I hope that makes sense. That's the London breakout strategy. I use it across these 4 pairs because they basically sort of signify risk on, risk off, and the sentiment indicator and the YouTrading.com Forex heat map can keep you on the right side as long as you follow the trend as well. All right, I'll speak to you again next week. All right, take care.